Today is Monday, July 22nd, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. And Alan, starting with the financial markets this morning, in light of the political uncertainties here in the U.S., what is the outlook for the interest rate market futures and the U.S. dollar? Basically, has anything changed?
Okay, well, the Federal Reserve has a long history of refraining from major changes in monetary policy in advance of major elections. But I think this time there will be an exception since financial futures markets are demanding that the Fed pivots to accommodation in September, of course, which is ahead of the November elections. So the Fed can only do what the free markets tell them to do. And right now, the free markets are very strongly suggesting or telling the Fed that they need to cut in September. And I think they will, in spite of the Fed's history of attempting or hoping not to do much ahead of an election. So I'm looking for a rate cut in September, probably another one in November. And that has been moved up from December. So there will probably be two rate cuts this year, September and November. And this should be supportive to the interest rate futures markets. It also would tend to be somewhat of a bearish factor on the dollar index, although there may be some flight to quality coming into the greenback. So look for the Fed to cut at a time where historically they have not, and that should be supportive to the credit market futures and a little bit bearish, I believe, to the dollar index.
And looking at the precious metals, do you think that gold futures will continue to gain on the silver?
Yes, I do, and the reason is that the gold will continue to enjoy the flight to quality influence that has supported the gold market as of late. However, the silver market, I think, is more susceptible to pressures of a weakening global economy. And a weakening global economy, of course, means lesser demand for some of the industrial metals. And of course, silver has that dual component of flight to quality and industrial demand. So I would expect the gold market to continue to gain on silver, and silver will most likely continue to be depressed by what appears to be softening demand for the industrial metals.
And Alan, lastly, what reports are traders looking at this week?
Okay, we do have some very important reports. Tuesday, June existing home sales at 4 million. But probably the more important Thursday, second quarter gross domestic product guessed at up 1.8%. And then Friday, personal income anticipated to be up 0.4%.
Turning toward the ag markets, Mark, with the firmer start this week, do you sense that maybe we've seen the lows in either beans or corn?
Well, I'm not terribly convinced we've seen the low in either yet, but if I had to pick one, I certainly lean towards the soybeans. Nearby corn prices are building some support here at the 390 level. However, we're really not seeing much of a lift off this level, despite the fact that speculators have extended their short holdings to record large recently at over 350,000 contracts. On the other hand, however, you've got the USDA data, which suggests U.S. farmers are holding over 3 billion bushels of last year's crop as of June 1st. So that's the most in nearly 40 years, when amount to about 600,000 contracts. So U.S. harvest is only a few short months away. So it seems like rallies have been held in check as farmers unload and clear some bin space ahead of this fall's harvest. And right now, U.S. weather has been mostly favorable, so the weather for the window for a significant weather problem is quickly closing. So I do think record yields appear highly probable in corn. And also, so far to me, the usage numbers from the USDA seem a bit optimistic. Beans, on the other hand, we do have some weather to go through yet, with probably about a third of this year's crop currently setting pods. We've got some dry pockets perking up here. We got some heat now, particularly for the Western Corn Belt. So we're definitely going to need to see some widespread rains here in August if we're going to reach or exceed the current USDA yield forecast of 52 bushels an acre. And like corn, we've also got money managers sitting on a record short position at nearly 186,000 contracts. However, U.S. farmer holdings as of June 1st only amounted to about 90,000 contracts. So to me, I'm feeling beans right now have a little bit more upside potential than corn. It's good to see both beans back above 10.50. I don't see a whole lot of resistance on the charts to $11 and wouldn't rule out a test of that the high here from early in the month of July at 11.30.
Mark, let's talk about that large spec position, holding these near record short positions. What will it take for them to start covering these large short positions?
Well, first of all, a late season weather problem here in the beans. I think that's what we're starting to see here today with beans up in excess of 20 cents in most of them. But yeah, we've got corn that saw a little bit of buying last week, lifted off the record short from the previous week. That or some pickup in demand. We started to see China finally start to book some beans from the U.S. and also saw a big sale to unknown last week. So they have taken advantage of the fall in price. But also that's twofold. We're also going to try to get, Brazil from extending their soybean acres here when they begin planting here in September. But yeah, record short positions in the ag space. We've now just exceeded the record short from May of 2019. We've also seen pretty heavy selling from the index funds. They've been net sellers now for 9 consecutive weeks, taking their holdings in the ag space to now the lowest level in 6 months.
Mark, we've had near perfect weather in much of the Midwest here for growing this year. Are there any areas globally where there are weather concerns?
Yeah, there are some areas that jump out. Southeast Europe, still too hot and dry. This would include central and eastern Ukraine, southern Russia, and western Kazakhstan. Modest cooling is expected this week. However, some rains that were forecast, still going to get some, but not as much as hoped, it sounds like, from forecasts we saw late last week. On the other end of Europe, still too much rain, raising quality issues for wheat production in both France and in Germany. We've got some heat moving into the U.S. Northern Plains and Canadian prairies. It's stimulated a nice bounce in canola futures here in the last couple of weeks. And weekend rains across Argentina were also a little bit disappointing. I think that's going to leave their wheat crop in need of some moisture. So, yeah, there are some areas of concern. No major, huge droughts right now, but yes, some areas are certainly popping up.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.